Good morning. David Schill here with Catapult Wealth's market update for the week of August 22nd. Hope you had a great weekend. Last week was the first week in several where the financial markets were actually down after the recent run-up off the lows since June 16th. We saw the S&P 500 down approximately 1.16%. The Dow Jones Industrial Average Index was essentially flat, only down about 0.05%, and the tech-laden NASDAQ Index was down 2.58%. The Russell 2000 Small Cap Index was down just a hair under 3%, so a relatively weak week in the markets for technology as well as small cap stocks. The bond index was down about 1% if we looked at the aggregate of US bonds. What caused the markets to wobble a little last week? Well, essentially, what we are seeing is there is this tussle between where the Federal Reserve is as far as interest rates and combating inflation, and where the markets are as far as the expectation that possibly the Federal Reserve may not need to do quite as much as what was originally anticipated earlier on in the year. And this back and forth between the markets and the Federal Reserve, this is what is creating essentially some of this wobble, a little bit of uncertainty, and questioning whether what we've seen in recent weeks is in fact a bear market bounce or whether it is actually the start of the next bull market. Well, we'll probably get a little bit of better news, or at least some news, during this week. Probably another pretty tough dose of talk on inflation as the Federal Reserve has its annual meeting in Jackson Hole, Wyoming, and the Fed Chair Jerome Powell is set to address the meeting this week on Friday at 10 a.m. Eastern Time. And his talk is likely to be pretty tough, essentially saying that the Fed is still taking in all of the data and that they will press on with rate hikes, tightening policy until they bring inflation down to within the longer term target, where seems a long way off right now, but that is around about 2%. So brace yourself. It could be a relatively tough week as far as inflation is concerned. The outlook for the consumer price index, however, actually has looked pretty good. We've seen some continued declines in gasoline prices, and that tends to be pretty good. All of us fill up our cars with gas. Tends to be good for food prices down the road. But what we have seen is that there have been moderate improvements in the price of hotels, airfare, and even used vehicle prices. So definitely some good news on the inflation front, and we would actually expect that to persist with the Fed continuing to be a little bit behind the ball, but again, better clues coming out of Jackson Hole at the end of the week. And with that, happy investing, and we'll talk to you on August 29th.